The pieces of financial plan is going to be insurance. You've got investments, retirement strategy, estate planning, and taxes. It's really important to make sure you protect your assets. Accumulating wealth is the goal, right? We want to make sure we have enough assets in order to provide for now, but we'll also to provide for the future, retirement, and even maybe a legacy, passing on our wealth to our kids. With insurance, there's a lot of different pieces to that. So we're going to have, of course, the personal lines insurance, which is home and auto insurance, golf carts, motorcycle, all of those types of insurance policies. Then we've got life insurance, health insurance, and long-term care. And so all those pieces of insurance are really meant to protect your current assets and also your future assets. We're talking about earnings, your income, things of that nature. And a lot of people have state minimum coverages of $25,000 per person, $50,000 per occurrence, and like, well, okay, well that's all the state demands of me to carry, so that's all I'm going to do because it's going to be the cheapest option. But what they're forgetting is thinking long term about how that could affect them personally, their assets, and even their income, their future asset, their future earnings. With having small liability coverages comes the risk of, if I cause an accident, I'm on the hook to having to cover all of those, the medical bills, the pain and suffering, all of the different things that come along with that accident, and which could very well be in the 50 to 100,000, hundred thousands of dollars of debt that would be incurred. And if I own a home, and if I have investments, and if I have a good paying job, they can not only use all of my insurance coverage, which we talked about, state minimum is $25,000 per person, $50,000 per occurrence. They can use all of that up, but then they can also put liens against my home. They can put liens against any future, when I go to sell it, they can put liens against any sort of proceeds, any profits from that. And they can also garnish wages. If I'm making $50,000 to $100,000 a year and I'm in my 30s, I mean, you're talking about quite a bit of money of future assets have to be taken into consideration. Because it's my job as someone who owns a vehicle and drives on the road, it's my job to protect and cover other people if I cause an accident. And so that's why it's really important to make sure to have, and I'm specifically talking about auto insurance, but the same thing can be said for home and all the other lines of insurance. It's really, really important to make sure that I'm covering and protecting my current assets and my future assets by carrying the right coverages in my insurance policies. And moving forward from that, life insurance, the purpose for life insurance policy is to make sure to take care of any sort of obligations now, use it to pass on a legacy, pass on future income is another reason why people have life insurance. So for instance, if I pass away, my life insurance policy would take care of my mortgage. It'll take care of any sort of outstanding debt that I have right now, but it'll also set up my wife it'll give her at least 10 years of earning, because when I die, my income goes away. I want to provide my spouse with at least 10 years of income so that she can live life and not have to make any rash decisions in that horrible time of her life. You really shouldn't be making those types of big decisions when you're grieving. Come across people that we know, or we've seen people on social media where there's postings about GoFundMe accounts because a loved one has passed away. And the important thing is just don't leave your family in the lurch. Don't leave them in a situation where now they have to cover, not only during the grieving process they have to grieve, but during that grieving process they have to cover all of these expenses that haven't been planned for. Take the time, for the couple minutes, hours that it takes to put together a financial plan. Take that time to set your loved ones up for financial success, even though there is a hard time that they have to go through that grieving process. But at least they don't have to worry about the financial loss along with the loss of a loved one.